Hi, everyone, and welcome to Mish's Market Minutes, Stock Charts TV weekly segment. I am your host, Mish Schneider, and thank you, Stock Charts TV, for giving me this platform to talk to you each week. I hope you enjoyed the last few ones. We talked about electric cars. They certainly have taken off. Last week, we talked about small cap growth stocks. We're going to talk a little teeny bit more about that today. But overall, my theme for today is that we're going to look at 20 of my top picks. I have more than this, but I just kind of picked these top 20 for you to look at. And a lot of it is going to have to do with what happens with the macro. So before you add these to your radar screen, we're going to review the S&P 500, the Russell 2000, and the transportation. I think those three are particularly important to what happens going forward. We're going to review the outliers, the junk bonds, the 20 plus year treasury bonds, the dollar, and oil. And then we're going to get to our picks. And as always, I like to give you a record of everything that I covered. I do see one mistake here, though. This should be ESTC, not WSTC. Okay, let's get started. We're going to start here with the S&P 500. And so what's interesting about the S&P 500 to me, the most interesting thing right now is we have a potential, I'm going to try to make this bigger so you can see this, a potential double top right here. If we look at this high, it was 422.74. If we move over to this high, it was 422.72. So that could be a double top, number one, or it could just be that we ran into some resistance, selling came in, and we're moving lower to power back up. One can really make a case for both at this particular time. Obviously, this 50-day moving average that is sloping up strong is for the positive side. For the negative side, though, if we're looking at the real motion indicator here, it is showing a little bit of weakness underneath the moving averages. So what we cannot look at, though, obviously, is leadership, because this is the benchmark that we like to use. So right now, we're not seeing a horrible decline in momentum, but we're definitely seeing a divergence with this being under the moving averages while this is over the moving average. So for the near term, we're looking at 418.50. That's the 10-day moving average that I don't have on the chart to hold. If that holds, clearly at this point now, you want to see it take out this 422.74. And then I think we might have an opportunity to see it go to 440. However, if we break down under 418.50 and then we can hold this 50-day moving average, not only could we have a revisit back down to the lows in March at 404, but it's possible we can see a much nastier correction, maybe even down as far as 380. And we are literally right smack dab now in the middle where you can make a case for both bullish and for bearish. So that means we have to go here to the Russell 2000, which you know is the granddaddy of my economic modern family. Now this too, if you look at it, is having interesting situation here where it is underneath both the moving averages and the real motion, showing momentum declining, however, sitting on the Bollinger Band, while it continues to sit above the 50-day moving average. So on this one right now, we do have a series of lower highs. Here's one, here's two, and here's three. So at this point, I would say if it clears 228.92, let's just call it 229, that would be a positive. On the flip side, if it can't and it starts to break down under that 50-day moving average, I would pay attention. Where could it potentially go? Maybe you can make a trip closer to the 200-day moving average or around 200. Again, right here, it's not bad looking, but it hasn't proven yet to me that it's going to hold. Now, if we move on to me, what's the most concerning, it's the transportation. As you know, I have done a segment on transportation stocks, and they were the leaders and have been the leaders really pretty much for the entirety of 2021. A lot of this had to do with the idea of an infrastructure package, and now we're starting to see bipartisan resistance. Gee, what a surprise. And if that doesn't happen, if this cannot happen, if we cannot see some kind of an agreement by both parties to have a good infrastructure plan, I think the market is going to get very disappointed by that. And so this was a great hope to me. Now it is definitely our last hope in terms of keeping the market going higher. Now, that doesn't mean there aren't instruments going counter. They're all over the board if you take a look. But the overall macro is important to pay attention to, because before you get caught long or buying something near its highs, things that are even going counter, if we get some kind of major correction in the market, everything pretty much, except for maybe volatility, will go down. So I caution you on that. And that brings me back to this point. Look at this on real motion. It's actually declining in momentum while it's still above the 50. So that shows a real divergence here. So basically what I'm saying right now is 270 has to hold, obviously 267.19 where your 50 is. And I'd really like to see this get back over 275. This little stick right here on this reversal day was powerful, and we haven't gotten anywhere near a 10% correction that might be typical on these big correction type candles. And if we did, that would bring us closer to 250 before we start to find some kind of level of support. Okay, now let's move over to the outliers. Junk bonds are so important. You know, you guys have heard me talk about this before, and there's a reason why this is important. The reason is because this is really where you're going to see the reflection of the risk on, number one, and number two, where when we talk about the bond buying of the Fed, you're going to see it here. So right now, once again, we have the divergence in the momentum is negative under the 50, under the Bollinger Band, or at least one of the Bollinger Bands, and under the 200, sitting right on another Bollinger Band. And as far as the moving average go, it's still managing to sit above the moving average here. But you can see that this made a high here recently of 109. And now we're coming off with yesterday's low, or I should say the day before low, 108.85. Right now, it's currently trading at 108.84. So we'd like to see 108.85. We'll call it pivotal. But really more important is what happens here with this 50-day moving average. We get two closes under the 50, and that would certainly make me cautious. On the other hand, if we get back over 109, then regardless of what the Fed is saying about their secondary corporate bond buying back program going away, it still means that we have a good risk on environment. The other outlier, of course, is the TLTs. And right now they are holding above the 50 in a recuperation phase, and they're holding above the 50 in momentum. So there's no divergence. This is a positive sign, because if the Fed can manage to ease up on the bond buying, but yet not spook the market into the yields rising, that will be confidence building for the market as well. So through 140, I think the bonds look compelling. Underneath 137, not so much. And then finally in the outlier, we're going to look at the dollar, because the dollar surprisingly firmed here. Here's UUP, and actually had a gap up above all this work it's done over the last few weeks. So now the real test will be if this can get closer to the 50-day moving average. If we start to see a phase change, that will be interesting. If we take a look here at the momentum indicators, it's sitting right below the 50. We did have a divergence here and never crossed the 50 here in price. So remember now, they have to match the momentum with the price. In this case, the momentum exceeded the price, and now the momentum is heading back over the 50 again. So I would say I probably wouldn't even change my mind about being bearish the dollar, unless, of course, we start to see two closes above the 50 and the momentum in line with that. That would be compelling, and you just have to lose your opinion and follow what you see in price. Okay, let's go to the picks. First one is US Steel. US Steel is giving me some pause because of the momentum, but it is sitting above the 200, below the 50, and it's holding here on the Bollinger Band. So we'd like to see a little bit of increase in momentum. However, what I like about this chart is that we have a really good support level here at 24.25. That's the 50-day moving average. We're trading now at 26.10. So if we continue to hold this level, we want to see this get through 27. Through 27, to have a $2.50 or $3 risk is actually not a bad risk to have in this, because if you're looking to make $6, that means you're looking at new highs, but this has been in such a strong uptrend. So that's probably not the worst thing to keep an eye on. So write down 27 is your key. Now, Canaan is actually getting a boost off the 200 because of the fact that it does Bitcoin mining in China. And right now, even though there's been a squash by China in terms of Bitcoin mining, this company has been pleading with China to allow Bitcoin mining for energy, green energy type companies, of which this is. And so even though it's a semiconductor, you can see it's moving up here even as I talk to you. But what's interesting now, though, is the momentum is still obviously weak, but let's see if I can get that 200 in there. Well, we're not seeing a 200 because of the fact that this is a newer issue. But nonetheless, what we really want to see now is this hold above the Bollinger Band. And of course, we have the 50 coming in a couple of dollars as resistance. So if I were interested in playing this, I'd probably now want to be looking more for a dip somewhere back down to around 10 to control my risk to under the 200. Or at this point, just wait and see if we get a move over that 50-day moving average. And remember, no matter what I'm giving you, even though things go counter, you always want to make sure the macro is in line. Now, Vulcan Materials is actually, I had pointed out as a infrastructure package play because this is in industrial and building materials. And what really made me put this on the list today is the fact that it is retraced completely down to the 50-day moving average. However, once again, your momentum is weak. It's hugging here the 200 and right underneath this Bollinger Band. So you want to see a little bit more momentum here coming in over that 200 and over that Bollinger Band. And if that happens and this continues to hug the 50, then you have a really good risk to under 179 for this to see if this has legs to go back up. Again, this is going to be very dependent on what happens with the macro picture. Now, IBB is one of those interesting instruments that has been up and down, but has been undervalued compared to the rest of the market. As this sold off, tested the 200-day, came back through, tested the 50-day, and now is back under it. It's basically flirting with it right here. So if we get a close at 151.10, I think your risk down to the 200 and just below is probably not a bad do, especially as I'm looking at the momentum. And even though it's still not above the 50, it is holding that Bollinger Band. So we get one blip in the momentum here to the upside along with the price. I would actually say this is probably something that I'm interested in. Don't forget, IBB made its all-time high back here in February. And that was interesting because the rest of the market didn't necessarily follow at the same velocity as IBB did. So there you go. Next is Xerox. And Xerox is underneath. Obviously, you can see the momentum. It needs to sit here on the 200 and it's under the 50. This makes this pretty easy to me. I like the slope on the 50 starting to point up. Two closes over this 50-day moving average or 24.20. And I would buy this one potentially with a risk maybe somewhere down here around 23. So you're talking about $1.20 risk on something like this. That would be very, very interesting. And also a tight risk and an easy risk reward to accomplish. Now, the next one is Playboy, which is actually moving up as I'm talking to you. But again, it got close to the 50. And now you can see here, it's getting this big move up as I'm talking to you. But 50, round number, is resistance. Now, at that point now, you have a $10 risk, which means you're looking to make 20. That might be a lot. So what I would say here is right now, if we're looking at some kind of a midpoint in terms of a risk, I would probably say that if we just look at today's low is 41.75, I'd probably say somewhere around 42. That's an $8 risk. At least if it goes up $16, you're getting close to the all-time high here, which is at 63. If you can come up with a tighter risk, great. This is another new issue, but Playboy looks very, very ripe, and they're doing some interesting things. It's not just about nude women anymore. Okay, next, Era Energy. This is conventional utilities energy. I always like to watch this one. It's a utility, of course, and it's definitely broken down in the momentum, as you can see. But we did have a good reversal pattern back here where it made a new 60+ day low, and then this day it gapped up. So at this point right now, I like to look at things that are a little bit undervalued. I'd probably be waiting to see this clear at least through the Bollinger Band. And then let's see what happens if we can get close to that 75 level. Then if we can get close to the 75 level, this might be actually ready to make a move higher. Now, one of my favorites is actually Telos. This is in the cybersecurity space. This is something that I'm actually looking to pick up potentially as I'm talking to you today, because yesterday it eked out a close above the 50. And today, even given the market weakness, it's now trading above the 50. This is the kind of thing I like to do at the end of the day. So by the time you're seeing this tomorrow, you could say, let it take out 3405. And then I would just very simply risk to the low of 32.73 with a little fudge today to see what this has. But this is in the cybersecurity space. And I really like these three bottoms that you're seeing down here as some kind of a launch pad. So TLS is something I'm watching very, very carefully, along with IBB. So far, those two, my favorite. Now, if we move on, another one in the cyberspace is Bug. It's an ETF. I love the name of it, number one. I love that it's holding the 50-day moving average here as far as the real motion, and it's getting closer to the 50-day moving average here. So I wouldn't buy it while it's declining. But if it holds 26.50 and clears 27.50, I think that would be another interesting dollar risk to see if you can make $2 is my kind of risk in this type of market. Don't want to be taking these risk rewards where I'm counting on new all-time highs in a particular instrument, unless you happen to get very, very lucky with that. All right, next one is natural gas. Now, the reason why natural gas is on my list is if you take a look at a weekly chart. Let me see if I can pull this up. You take a look at the weekly chart. You have the 50-week moving average, which it has not been above since here, back in 2019. Getting pierced. Now today, as I'm talking to you, is Thursday. So on Friday, by the time you see this, if this closes above 1075, which is where that 50-week is, I think you have a good risk, and you can use under 1025 as your risk point. That would be 50 cents to see if this thing has the legs to go up. I think natural gas has the ability to go to 15 if we have that close over that 50-week. Plus, what you can see here now is the momentum is showing positive momentum. That's a really good thing. So all we need now is that confirmation. Now let's go back to the daily chart and go to the next stock. So keep UNG on your list for sure. And that doesn't really care what the rest of the market does, by the way. Now, I just want to show you this because this is the grayscale Ethereum. We actually bought some yesterday. It's starting to do better. I'd really like to see this get through 30, of course, but for right now, as long as it holds this 50-day moving average, I like it. And if you look at the momentum here, it's not quite to the 50 yet, but it's darn close. So if this gets higher in momentum, while this holds here and gets through 30, that's probably what I would be waiting for. I might even consider an ad at that point. So WWE is another one that I like. Now, this is World Wrestling. This now is still under the 50 in momentum, so it still has a little bit of a divergence, but not much. We're getting the second close above the 50 today. So by the time you hear this, if it actually has held 55.60 or that 50-day moving average, I would say that you could probably be looking to get into this on Friday and have your stop probably under here, under 54.34, and just see where this can go. That means even if you got in at 57, you're talking about a $2.50 risk to see if you can make $5. Well, at least you wouldn't be waiting for new highs, because it did tick up to 61 back here in late March. All right, next one is App Harvest. I think I may have talked about this one, at least on Twitter, at 13. Now here we are at 18. And it still looks like it's forming a bottom here. And you have a good risk if you use the 200-day moving average under 1686. So right now you want to see this take out 1862. It's trading at 1830. If it takes out 1862, you can risk to under 1680. And that means you got a $2 risk to see if this can make $4. And again, this has been up there, so it's certainly within the realm of possibility. Next one is snow. This too, new issue, clearing the 50-day moving average. Now, I had talked about snow based on this reversal pattern, and obviously the better entry was down here right above 200. However, if it can get through 250, and I especially like if it starts to do more work between 227 and 245, that would be good. The more it stands out here and then breaks out over 250, the better. But at this point, if it breaks out over 250, then I would be interested in this. I probably wouldn't risk all the way down to the 50-day moving average, but I would probably say at this point now it has to hold 240. So that would be a $10 risk to make 20. Again, not counting on new highs. So I like that. This is the one that I had the wrong symbol on. So here's the right symbol. This reported earnings and did very, very well. And you can see that it's sitting right on the 200. Now, the momentum hasn't really had a chance to catch up here, so that's not as important. But right now, what I really like is you have a great risk here to under 123.75, Thursday's low. So if this holds a second day on Friday above this 125, you could go in. You could risk to under 123.75. So let's say you pay, even if you're paying 130, you risk $5 to make $10. Again, this has been up here with a high all the way up at 176.49 that we saw at the beginning of 2021. So I like this. It's a company that deals with big data. Now, another one that's really automated cars, this is Luminar. Now, Luminar is also ticking up here in momentum as it's clearing the 50-day moving average. Now, I wouldn't chase this one because it's getting into resistance right here. But I would say if we can get a move down closer, back to around 23, then you can risk to under the 200 to see where it goes. So this would be something I would watch for a dip at 23 rather than chase. Two more to go. Beyond is the next one. So Beyond is another one. There was some good news about it. You could see it had a big pop up, but even if you miss this right now, it is consolidating over the 200-day moving average with the momentum sort of heading close to that direction. 150 is your number. You get through 150, I think you can either risk down to 132, but that's a lot, $18. Remember, that means you're looking for $36 higher than 150 at 186, which, by the way, is where it was up in these levels. I would rather pick a different stop. So if it clears 150, most likely I would use maybe somewhere underneath that 200-day moving average at 142.50. So figure a $10 risk to make 20 at 170 seems much more realistic. And last one to show you is another one that reported earnings the day before I'm doing this video, and that's NetApp. Also big data, also showing divergence here. And of course, it made a big move right post earnings. So if it clears 80, you can risk down to under the 50. That's not a bad do. You're counting on this going up more. Again, macro picture. And otherwise, if you wanted to wait, I would wait for some kind of dip, maybe closer to around 77, 76, and then you would have a really good, a really tight risk to under the 50. So I hope that gives you enough information and enough really interesting stocks to look at. As I'm talking to you, it looks like so far the SPY is holding, the IWM is holding, and the IYT still needs to play a little bit of catch up. So I don't mind this little bit of patience here, because very often IYT will go down, the rest of the market will not figure it out, and then 2 days later it does, and you see everything crash at the same time. So be wary of that and keep your eyes on that junk bond and on the IYT. Thank you so much for watching. Hope this was helpful. Put it on your radar screen, and I'll see you all next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.